Welcome back, everybody, for another deep dive. This time we're going exploring the world of accounting.
Ooh, exciting.
Well, and you know somebody's got to do it right.
Right.
So today we're going to be talking about rule-based versus principle-based accounting.
Okay.
And you don't have to be a CPA to understand that.
Yeah, no, this will be a good one.
Yeah, we're going to be talking about how these different systems can really change how companies report their finances.
Absolutely.
And this could be especially interesting, believe it or not, when we're talking about companies in tech and healthcare.
That's right. And, whether you are an investor or an entrepreneur or just someone who likes to, keep up with the business world, this is going to be relevant to you.
Exactly. So we've got all this research here comparing GAAP, which is what's used here in the U.S. It's a rule-based system. And then we've got IFRS, which is more principle-based, and it's used internationally.
Right.
And one of the things that surprised me is just how much leeway companies have depending on which system they use.
Yeah, it is pretty fascinating, isn't it? It's kind of like the difference between, if you were going to cook something and somebody gave you like a precise recipe versus saying, here's some high quality ingredients, here's some good cooking techniques. Now go make something delicious.
I like that analogy.
Yeah. So rule-based accounting, like GAAP, lays down very specific regulations, for recording and reporting financial information.
Okay.
And it's great for consistency and comparability.
Yeah, I was going to say, as an investor, that would be very reassuring, right? Like, you know what to expect.
Right, exactly.
But like with anything that's really strict,
Yeah.
I'm guessing there's got to be a downside.
Oh, absolutely. And one of the big downsides is that you can have situations where, a company is technically following the rules, but they're not really reflecting the true economic reality of what they're doing.
So they're checking the boxes, but not really telling the whole story.
Exactly.
Yeah.
Yeah. So that's one of the challenges with a strictly rule-based system, on the other hand.
Oh.
You've got principle-based accounting like IFRS, and that provides more overarching guidelines and principles.
Okay.
But it does allow for a little bit more professional judgment when you're applying those principles.
Okay, so that's good because then it can kind of be adapted to the nuances of that business or that industry, right?
Right, exactly.
But wouldn't that make it harder to compare companies because there's more room for interpretation?
Yeah, that's the trade-off, right? It allows for potentially, a truer reflection of what's going on with the company.
Mm-hmm.
But it can be harder to compare, and, investors really need to understand how those principles are being applied.
Yeah, that makes sense. Okay, so we've got like the definitions down, right?
Yeah.
But how does this actually work in the real world? Our research mentions a bunch of different industries where this difference is really important.
Absolutely. Let's start with financial services. So
Okay.
in the U.S., banks pretty much stick to GAAP, especially because, there's such a strict regulatory environment.
Right, of course.
And it provides, that clear framework that they need for all these complex transactions.
Okay, that makes sense. But I know internationally a lot of banks use IFRS, so I'm guessing that flexibility comes in handy when you're dealing with transactions across different markets and stuff.
Absolutely. And one of the areas where this is really apparent is how they classify financial assets and liabilities.
Okay.
So IFRS 9, which deals with that, has, significantly changed how some banks present their positions compared to GAAP.
Interesting. Okay, so even within the same industry, the way companies are reporting can be really different depending on what system they're using.
Mm-hmm.
Okay, how about tech companies?
Yeah.
Those guys are constantly, coming up with new innovations, new business models.
Yeah.
How do they navigate this whole rule-based versus principle-based world?
Yeah, that's a great point. The tech sector is a great example of where the flexibility of IFRS can be really beneficial.
Yeah, I can see why it's such a fast-paced environment.
Yeah.
I imagine like waiting for a specific rule for every new situation would just be like stifling.
Exactly. And, take IFRS 15, for example.
Okay.
This standard provides guidelines for revenue recognition, which is really crucial for tech companies that have, subscription-based models or cloud services.
Right.
And it allows them to account for revenue in a way that reflects the ongoing nature of those customer relationships.
So it's not just a one-time sale. It's like you're recognizing that revenue stream over time.
Exactly.
So how would that be different than like a U.S. tech company using GAAP? How would they handle that?
Yeah, so under GAAP, the rules for revenue recognition can be a lot more prescriptive. So potentially you could have differences in how that revenue is reported and when it shows up on the income statement.
So even if the business model is the same, their financials could look different just depending on
Exactly.
GAAP versus IFRS.
Exactly. And that's why it's so important for, investors to really look beyond just the numbers themselves and understand what are the methods, the accounting methods that are driving these numbers?
Yeah, it's like you need to understand the language to get the message, not just hear the words.
Yeah.
What about healthcare?
Yeah.
They also have some pretty unique challenges, I imagine, when it comes to financial reporting.
Absolutely. In the U.S., healthcare providers often rely heavily on that detailed guidance from GAAP,
Okay.
particularly for complex areas like revenue recognition and cost accounting. But internationally,
Hmm.
some healthcare companies find that IFRS is a little bit more suitable for representing things like long-term investments in research and development.
Right, because those projects might not generate revenue right away,
Right.
but they're super important for future growth.
Exactly.
Our research mentioned IFRS 16 specifically and its impact on lease representation.
Yeah.
It requires companies to include most leases on their balance sheets,
Right.
which I would imagine is particularly relevant for healthcare providers that lease a lot of equipment.
Oh, absolutely. Yeah. IFRS 16 really provides a much more comprehensive view of a company's obligations, their financial obligations, which can be very significant in an industry like healthcare.
So once again, it's not just about the raw numbers, it's about understanding what's behind them.
Exactly.
Okay, what about manufacturing?
Yeah.
Where do those companies usually fall in this whole debate?
Yeah. So in the U.S., manufacturing often leans towards the consistency and the clear guidelines of GAAP, especially when they're managing, complex supply chains and inventory.
Yeah, GAP's detailed rules would definitely be helpful for that kind of stuff.
Absolutely. But for global manufacturers that are operating, in lots of different environments, IFRS might be a better fit for representing, their more diverse operations.
So kind of a theme here, it seems like U.S. companies, because they're bound by regulations, stick with GAAP and international companies,
Right.
like the flexibility of IFRS.
Yeah.
But what about the impact on the actual statements themselves?
Yeah, that's where it gets really interesting. These different approaches can have a big impact on how a company's financial picture is presented to the world.
Okay, let's dive into that. Okay, so we've got these two systems right, each with pros and cons. But how did we even get here? Was accounting always this layered?
That's a really interesting question, actually. It's kind of fascinating to look back at how these approaches developed. In the early days of accounting, things were a lot simpler.
I bet.
Fewer rules, fewer regulations.
Yeah, businesses were less complex.
Mm.
The global economy wasn't as interconnected as it is now.
Exactly. But, as commerce grew, as companies became more sophisticated, there was this growing need for standardization.
Okay.
Investors needed a way to reliably compare different companies, and regulators wanted to prevent fraud, ensure transparency.
So that's where rule-based accounting comes in.
Exactly. And GAAP, really emerged as the leading example of this approach, especially in the U.S., providing this clear, consistent framework for financial reporting.
Okay.
You could say it brought order to the chaos.
Right. Everyone's playing by the same rules, so it's easy to understand what's going on. Okay, so that makes sense. But our research mentions that things started to shift in the 20th century. What happened?
Yeah, well, as the global economy became more interconnected and as businesses started developing, more complex financial instruments and transactions,
Okay.
the limitations of just having a rule-based system became really apparent.
So it was like trying to fit a square peg into a round hole.
Exactly. Yeah, the world of business was kind of outgrowing its accounting clothes.
I like that.
Think about like the rise of multinational corporations, that have operations in different countries, different currencies, or the emergence of complex financial instruments like derivatives.
Yeah.
It became really challenging to come up with a specific rule for every single possible scenario.
Okay.
Right.
So that's where principle-based accounting steps in.
Exactly. It's less about, a rigid set of rules and more about providing those overarching guidelines that can be adapted to different situations. So IFRS, with its emphasis on capturing the economic substance of transactions, really emerged as a leading example of this more flexible approach.
Really?
It allows companies to use a little bit more professional judgment in applying those principles to their specific circumstances.
So instead of just checking boxes, they're encouraged to actually think about what's happening in these transactions and present a more nuanced picture of their financial health.
Precisely.
I was thinking, this kind of reminds me of how legal systems work in different parts of the world.
Oh, yeah.
Some are based on very strict codes and precedents.
Yeah.
And others rely more on judicial interpretation applying general principles.
Yeah, that's a great parallel.
So accounting has a similar kind of divide.
Exactly. And just like in law, there are pros and cons to both approaches.
Of course.
Rule-based accounting gives you clarity, consistency, but it can be inflexible.
Right.
Principle-based allows for more nuanced representation, but it can lead to inconsistencies and make it hard to compare.
So it's a balancing act. But it makes me wonder, as the business world keeps changing so fast, with technology disrupting everything, what's next for accounting? Will one of these approaches eventually win out, or is there room for both?
I mean, that's the million-dollar question, right? And honestly, I don't think there's a simple answer.
Okay.
Both rule-based and principle-based accounting have their merits, and I think the best approach really depends on the specific circumstances.
Right.
It's not just about choosing between these two, static systems.
Okay.
Both GAAP and IFRS are constantly evolving. They're adapting to new challenges and incorporating feedback from the business world.
So it's not a static picture, it's a dynamic process.
Exactly.
It's so fascinating how these accounting systems are almost like reflections of broader trends in society.
Yeah.
Talked about globalization, the rise of these complex financial instruments, and now technology.
Yeah.
It seems like these forces are constantly reshaping how we even think about accounting.
Absolutely. And technology in particular is having a huge impact. Think about the rise of big data, artificial intelligence, blockchain.
Right.
These technologies are changing how businesses operate, how they collect and analyze data, how they interact with their customers.
Yeah, it's all happening so fast.
Yeah.
How is the accounting world keeping up?
Yeah.
I can't imagine these systems were designed with cryptocurrency and NFTs in mind.
Well, they weren't, but the people who set the accounting standards are constantly working to address these new challenges.
Okay.
There's a lot of discussion going on around how to account for digital assets, how to apply existing principles to these new business models, and how to actually leverage technology to improve the efficiency and effectiveness of financial reporting.
So it's almost like a constant game of catch-up, trying to anticipate what's next and how to best reflect those changes in a company's financials.
It is, and honestly, it's a really exciting time to be in the accounting world. There's this real sense that we're on the verge of a major transformation, and how these different accounting approaches adapt and evolve will have really significant implications for businesses, for investors, for the global economy as a whole.
I'm starting to see why you find this so fascinating.
Yeah.
It's not just about numbers.
Yeah.
It's about understanding the story behind those numbers, the economic realities that they represent, and all these forces that are shaping the business world.
That's what makes accounting so much more than just bean counting. It's about providing insights, enabling informed decision-making,
Right.
and ultimately contributing to a more transparent and accountable business environment.
Okay, so we've gone from the origins of accounting to this frontier of technology and innovation, but we need to bring it back to our listener. How does all of this actually impact them?
That's such a crucial point. Whether you're an investor, an entrepreneur, or just someone who wants to understand the business world better, having this knowledge about these different accounting systems is so empowering.
Because it's not enough to just look at a company's financials at face value. You need to understand the accounting lens through which those numbers are being presented.
Exactly. Recognizing whether a company is using DRAP or IFRS and understanding, what are the potential implications of that choice can give you a much deeper understanding of their financial position, their performance.
It's like you're able to read between the lines and see things that maybe aren't so obvious at first glance.
Exactly. And that deeper understanding can make a huge difference when you're making investment decisions or evaluating business opportunities or even just trying to understand the financial news.
So the next time I'm reading an earnings report or listening to a CEO talk about their company's performance, I'm going to be thinking, okay, what accounting system are they using? How might that be influencing how they're presenting this information?
That's exactly it. It's about developing that critical eye, asking the right questions, and not taking the numbers at face value.
And honestly, that kind of financial literacy is so beneficial in all aspects of life, not just business.
I totally agree. It's about, becoming a more informed and empowered individual who can navigate the complexities of the financial world with confidence.
We've covered a lot today, but there's always more to explore. So before we wrap up, what are some key takeaways our listeners should keep in mind?
Well, first, remember that a company's financial statements are not just objective facts.
Right.
They're constructed through the lens of an accounting system, and that system can have a big impact on how those numbers are presented.
Like we said, it's the story behind the numbers that really matters.
Exactly. And second, when you're comparing companies, especially companies that operate in different countries, be mindful of whether they're using GAAP or IFRS.
Right.
Those differences in accounting methods can create those apples to oranges comparisons if you're not careful.
And last but not least.
And finally, keep in mind that both rule-based and principle-based accounting are constantly evolving.
Right.
Staying up to date on the latest developments and trends in the accounting world will make sure that you're equipped to make informed decisions.
This deep dive has been a fantastic reminder that accounting is so much more than just numbers. It's this dynamic field that reflects the complexities of business and the forces shaping our global economy.
Well said. I hope our listeners will walk away with a newfound appreciation for the intricacies of accounting and the power of understanding these different approaches.
I know I have. And if you're feeling inspired to learn more, we've got some great resources linked in the show notes. We've got articles that dive deeper into the specific standards we talked about, like IFRS 9 and 15.
Yeah.
As well as some really thought-provoking pieces about the future of accounting in a world that's becoming increasingly dominated by technology.
And don't be intimidated by, the jargon or the technical details.
Right.
Just start with whatever piqued your interest during our conversation today and go from there. You might surprise yourself with how much you can learn.
That's great advice. And remember, even seasoned investors and business leaders are constantly learning and adapting in this field. It's a continuous journey of discovery.
It is. And the more you understand about the underlying accounting, the better equipped you'll be to make sense of financial information and navigate the complexities of the business world.
Well said. So until our next deep dive, keep those brains engaged and never stop exploring.
I know I have, and if you're feeling inspired to learn more, we've got some great resources linked in the show notes. We've got articles that dive deeper into the specific standards we talked about, like IFRS 9 and 15,
Yeah.
as well as some really thought-provoking pieces about the future of accounting in a world that's becoming increasingly dominated by technology.
And don't be intimidated by, the jargon or the technical details.
Right.
Just start with whatever piqued your interest during our conversation today and go from there. You might surprise yourself with how much you can learn.
That's great advice. And remember, even seasoned investors and business leaders are constantly learning and adapting in this field. It's a continuous journey of discovery. It is. And the more you understand about the underlying accounting, the better equipped you'll be to make sense of financial information and navigate the complexities of the business world.
Well said. So until our next deep dive, keep those brains engaged and never stop exploring.